Sometimes a chart reaches a point where every candle feels like a quiet warning, a place where the structure is trying to decide whether it will save the trend or surrender it. And right now ICP is standing exactly at that line, a line that traders should not ignore. This is Shah, and today we are looking deeply into a setup that is balanced between opportunity and danger, depending entirely on how price reacts next. ICP is currently trading around $3.39. In the last update, we marked the support at $3.7, but that level was lost as sellers pushed the price downward inside a falling wedge pattern. Falling wedges are usually bullish reversal formations, but they work only when the breakout holds, and that has become the central issue here. We talked earlier about the importance of breaking the wedge and reclaiming $3.7 to confirm strength. And ICP did take the first step. It managed to break out of the wedge, giving traders hope that momentum was shifting, but the problem came right after. Price failed to break the resistance sitting just above the wedge, and that rejection was strong enough to push ICP back inside the pattern. Whenever a breakout is followed by an immediate failure and a return into the pattern, it signals weakness and hesitation from buyers. Now ICP is sitting right on the upper boundary of the wedge once again. This is the line between a recovery and a continuation of the downtrend. If price manages to break the wedge boundary with conviction and then push through the overhead resistance, we can talk about reclaiming lost support levels. But if it fails here again, especially after already failing once, the chart becomes vulnerable to a deeper decline. The next major support below this area sits at $2.8. That is the same zone from where the previous bullish rally started, a level where buyers stepped in aggressively and reversed the entire trend. When a chart loses its mid-range support and gets pulled toward its major support, it often needs to touch that zone again to find real strength. That is exactly what could happen if ICP cannot break both the wedge boundary and the overhead resistance. The story right now is simple but critical. The wedge breakout attempt failed once. Price is retesting the same boundary again. If it breaks, we reset the map and reanalyze the upside levels. But if it fails and slips back inside the wedge, the path toward $2.8 becomes almost unavoidable. And because that level is such an important historical support, the reaction there will determine the next large move in ICP. This setup requires patience, not emotion. The chart is showing its hand clearly. All we need to do is wait for the confirmation that decides the direction. Until then, be cautious, protect your capital, and let the levels speak. And if you want more clear structured breakdowns like this every day, stay connected. There is a lot more analysis coming your way.